Welcome. 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 Welcome to the ARMR Report. This is the weekend wrap-up. Thanks for being here with me. ARMR stands for Algorithmic Risk Management Research. This is a show about stock market investing. We call this quantamental investing on our trading desk. It's the combination of quantitative execution using algorithms, and we combine it with a fundamental foundation, and that's the information edge that I share with you. All of this information I use to manage my own personal assets and that for investors I work with. It's a live trading desk, so bear with me. I'm surrounded by screens. I'm involved in trades as we speak. The phone might ring. I might have to pick it up. But for the next 15 minutes or so, I'm going to try to share with you, just crystallize some of the information on our desk that's making money for us right now. I want to take 30 years of experience doing this, put you on my shoulders so you can reach higher. That's what I'm trying to do. Learn from my mistakes, learn from my successes. Okay? Today is a show about the pot stocks, right? Cannabis stocks. We all love them. They've all been getting destroyed. We keep talking about it. I do believe there will be a major investment cycle up in these stocks at some point. But right now, we're mired in a major downtrend, and we're trying to catch that first wave off the bottom. There's one stock you need to pay attention to. The rest you can forget. I'm going to talk about that. But before I get to it, I do want to share with you guys, as always, our view of the stock market. All right? 7 out of 10 stocks follow the market. So I don't care how great an investment theme is or an individual stock you like. If the whole market is breaking down, it's the wrong time to be putting money to work. All right? If the market's rocketing higher, have at it. But if the market is more than 2 standard deviations above its key moving averages, well, then we're at a crossroads. And I'm going to share that with you right now. Let's discuss this. Those of you who are ARMR insiders, thanks for being an insider. You can subscribe at armrreport.com, ARMR Report.com. You'll be able to drill down and see on that website the risk monitor. Now, I'm updating that risk monitor. It uses 7 algorithms that address 7 different equity indexes that we believe on this desk drives market direction. If we can understand those indexes, we can get an idea of whether or not risk is elevated and we have to be defensive, or the reward to risk is perfect and we can get aggressive. To crystallize those algorithms and make them simple to understand, I'm going to say this. When we are 2 standard deviations above major moving averages on the S&P, major being the 50-day, the 200-day, you're generally not going to see us adding stocks aggressively to our portfolio. We're going to sit back and enjoy the ride. We already bought stocks, okay? We're going to be adding when we're either at those moving averages, below those moving averages, somewhere around there, okay? So that's just a basic guide. It's not always like that, and so we use the algorithms to help drive our decision process. So if you log into armrreport.com and you check out the risk monitor, it's going to be a yellow light. It continues to be yellow. We keep saying, yes, the market's going to grind higher for now, and that's great, and we're going to make money. But we're not going to be aggressive. We're not going to get caught up in the excitement of how the market's about to explode higher and everyone's got to put all their money to work and start using margin. Wrong time for that. Now's the time to enjoy the hard work you did back in October. Let's take a look real quick before we get to pot stocks. I'm going to get to the cannabis stocks next. Let's just look at this real quick. Okay, you're now looking at the S&P 500. SPY is the symbol. These are all ETFs that our algorithms are designed to trade and invest in. Those yellow highlights are showing you, and if you look at that teal, that thick teal line, is 2 standard deviations above the key moving average. In this case, it's the 50. Okay? We are more than 2 standard deviations above. It doesn't mean the market can't keep going up. It certainly can. Look at those highlighted areas. It can crawl up that standard deviation for a couple of months. But eventually, when it comes off of those highs and fails to retouch, that's when it gets dangerous. So we're not calling for, selling here. It's not, we're not going from yellow to red yet on our risk monitor. But it is important to realize where you are in the market cycle. Okay? And this is the stage in the cycle to just reap the rewards of what you were doing a couple months ago when you were buying right. Okay, now let's move on. So the reason I talk about that first is that when I look at cannabis stocks or any new investment idea, take what I'm saying now and incorporate the thought of risk. The market's already had a huge move, and this index, MJ, we're going to talk about, the marijuana stocks, have been destroyed. Okay, so you're not going to get any help out of the market. Right? The market has a big setback. No one's going to be putting a lot of risk money into marijuana stocks. Okay? But there is only one stock you've got to follow right now if you're trying to catch that bottom. And it's MJ. It's the ETF MJ. Nothing else matters. Don't talk to me about this management team is great, or this product is great, or this company's got this thing going on, or I love, this dispensary. None of that matters to making money in the stock market. Okay? Information makes money. You've heard me say this on the show before. And institutions make markets. Okay? We have to get the right information and then put capital to work when institutions are moving capital into a space. They're not doing it right now. I've said for a long time, for conservative investors, you do not have to call the bottom. Wait for the inflection point. There will be something that occurs that rips this whole group up off the bottom, and that'll be the beginning. I don't care if you pay up for it. Look how much it's down. If you've been listening to me since last May, you've been basically out of the space as a conservative investor. So what if you pay up for it a little bit? You've avoided massive destruction. Okay, for my aggressive guys who want to try to catch the bottom, we step in with tight stops and we step out. Market goes to a new level, new low. We step back in, tight stops, and try it again. We've done it a couple times. We're still working on the process right now in MJ. The reason I'm telling you MJ is the key, I've had a lot of people tell me how much they like Aurora Cannabis, and I've been trying to tell them for a while now. 2 things. Number 1, when the whole group is down this much, you just need a group ETF to catch the first move off the bottom. You don't have to differentiate yet. You're just trying to get the first flush of institutional money back into the space. So when that happens, it's going to rise all boats. Boom. All these big names are going to go up. You don't have to pick and choose. But the risk right now is too high on individual names. So you can use the ETF as a way to reduce your risk while you're trying to catch the bottom. That's why I say this is the number 1 stock to watch and invest in right now. By the way, I'm not telling you what to buy. I don't know you, so I couldn't possibly say do this. I would never do this on a YouTube video. If you want to get more in-depth about what stocks I'm actually buying right now, then you become an ARMR insider. Please feel free. Subscribe. Go to the ARMRreport.com, ARMRreport.com. Subscribe, and you have one-on-one access to me, and we can drill down deeper. But for the sake of this conversation, MJ and ETF, a basket of all the names, will reduce single stock risk. And when you're in the teeth of a massive downtrend, that's what you want to do. And Aurora Cannabis is a perfect example of that today. Stock's getting whacked because a couple of analysts decided to downgrade it, which is a total joke. Where were the analysts when the stock was 10? Okay, so now all of a sudden they're going to downgrade it with a $1 price target. Give me a break. What a waste. I can't believe they have a job. But okay, whatever. But my point is, I digress. My point is, you could avoid that risk by just owning MJ. MJ stock's down 1% right now. Aurora's down 9%. It's just that simple. Now is not the time to pick and choose individual names. Now let's take a look at MJ. I want to share something with you here. Okay? Let's take a look at MJ. Now you all know that we've been talking about this possible bottom that's building, going all the way back. Let me just see something. Hold on a second. Okay, going all the way back to this triple up day. Bang, 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 these 3 days in a row. Okay? That's what started this most recent bottoming process. We had another day right at the end of the year where tried to double bottom and pop up, test it again. It's still trying to hold in here. So for the last, 2 months now, we've got a consolidation pattern. So if you're focusing on MJ, you're not losing a lot of money. If you're buying individual names during that period, you're losing money, right? Because here's ACB breaking down to new lows. Okay? Here's TLRY, right? Breaking down to new lows. Okay? Some of our favorite, names to talk about. These stocks are breaking down, but you go to MJ and you say, oh, okay, this thing is still holding its bottom. So the safety feature, okay, the safety feature that's in owning an ETF, so you don't have single stock risk, is incredibly important right now. In a couple weeks, we're going to start getting earnings announcements. Nobody expects them to be any good yet. The question is, they're going to be bad. Are they worse than people think? Is there any glimmer of hope? We're going to have some conversations about Cannabis 2.0 and edibles and all these types of things. Who knows what they're going to say? But you could be sure I'm not going to want to own an individual name going into earnings. If I do want to own the space, I'm going to own a group. I have more liquidity, and I don't have single stock risk. And that's why I'm telling you, MJ is the most important stock for you to watch right now. Okay? Let me just mention one more thing. I have been saying to you that, and I am not recommending any stocks in this space, but I will say that the stocks that are differentiating themselves from the pack are the ones with the cash. I've been saying that for a while now, right? So the ones that are breaking down, ACB, whomever, they don't have the cash. They need the cash. So you get brokerage reports coming out talking about how they're not going to be able to make their debt covenants and they're going to have to raise more cash, and who knows if they can about Aurora. Meanwhile, just take a look at this one stock. Okay? Take a look. Right? That's Canopy Growth. Maybe we hate the company. Maybe we don't like the management team. Who knows what's going on there? But the stock is well above the lows when that 3 up days occurred back in November. Why? It's because they got the cash hoard. It's because they got the cash hoard. Here's another stock for you. Right? Stock is trading above its double bottom. IIPR, Innovative Properties, 5% yield. It's a REIT. It's in the cannabis space. It's a way to play the US MSOs. The stock's not making new lows because it doesn't need cash. And when they raise cash, they immediately put it out into properties. Okay? So there's just a couple of examples of stocks that are holding up well. Okay? Even though the whole group continues to suffer, some of the big names get destroyed. Here's a couple stocks that are holding up well. What's the similarity? They don't have cash problems. All right, guys. I'm going to wrap up with that. I do want to tell all ARMR insiders I did make an addition to the ARMR portfolios today. So you can log in, take a look, ARMRreport.com, go to ARMR portfolios. You know, we have 4 portfolios there. 3 of them are individual stock portfolios. 1 is index only. So on our individual stock portfolios, conservative, balanced, and aggressive, we've added a new name. It's a 4.7% yield. It's a new name and an old favorite, so take a look. Don't forget, guys, I appreciate you giving me a thumbs up. Subscribe if you haven't. Just go right down there in the description page. Boom. Click on it. Subscribe. I'd love to have you as a subscriber. Don't miss any updates. I hope you have a great weekend, and I look forward to talking to you guys again on Monday. Take care.